Hey guys, welcome back to another video. In this video, we are going to go over something known as inner structure. But before we get into it, make sure to subscribe, give this video a like, and follow me on Instagram to keep up to date with what I do on a day-to-day basis. So let's get straight into it. So what is inner structure? Before we can cover what inner structure is, we need to understand there's two types of structure. You have outer structure and we have inner structure. As like a formal definition of what inner structure is, we can define it as structure that is within a price leg. That might be a bit confusing. So what we're going to do is we are going to go through an example. So if we look at GBP USD over here on the weekly time frame, what we can do is we can go about marking out structure. So if I start to do so, for example, let's start off over here. We have a high, we have a low, we have a lower high, we have a lower low, we have a lower high, and then we have a lower low. Okay, so these are our price legs. I'm not going to count this bit because it looks to me as a distribution. So price came, distributed, and then dropped lower. Now, where's the inner structure? So what we need to notice is here is our price leg. So from this point here to this point here. And naturally, for example, if price was like here, we'd be expecting a retracement from here to there, and then or around here somewhere, and then price to drop lower. And that's what you'd expect at this point in time. Now, this is where inner structure becomes very, very handy and helps us understand that there is a probability that price can go to the upside, and there is also a probability that price can go to the downside. So this, what we have here marked in blue with these blue dots, is what we'd call outer structure. So let's have a look at what the inner structure is. So if I come back out of the replay and move into here, I want you to notice this price leg. So this move over here. So this move over here. Let's go in and start marking out these structural moves. So if I maybe drop down to the daily time frame so we can see it a lot better. So we have a move up, we have a move down, we have a move up again that doesn't break the high. So let's just go like this to here. We can start this as a lower low. We can call this the lower low. So we have low, high, higher low. At this point here we get a higher high, higher low, higher high, higher low, higher high, another higher low, and then we get a higher high, a higher low, and another higher high. If I zoom back out again, back to the weekly time frame, I want you to have a look at this. At this point here, you know, people may be looking for shorts for price to continue to the downside. But we can see the inner structure is telling us we are moving to the upside. So within this time frame, so we're looking at from, let's say, 10th of October to 16th of April, you would be looking for price to move to the upside. But that doesn't mean our overall trend is to the upside. It's just the inner structure. And we know at some point, the inner structure will give way to the higher time frame. And that was when this blue level of structure will come into play. But that doesn't mean the inner structure can't win. It can sometimes. But what I mean is, this inner structure is either going to break out to this side, to the downside, or break out to the upside. And all we have to do is wait. And all we can do is follow the inner structure until it does so. So in this example, as we can see, we have downside outer structure. Then the inner structure starts to move upside. As we can see, it's a lot more slow and a lot more correctional than this impulsive move to the downside. And then what do we have? Price ends up pulling to the downside, and then we get the lower low that we were looking for. So now that we've seen a live example, let's take a look at some theory. So we've all seen an A, B, C, D move, right? And the move starts from here, A, pushes up to B, creates a high, pulls back for a retracement, C, and then a higher high, D. And obviously the inverse is true as well. Where does inner structure fit into this? So inner structure generally, or in the generalized model, fits in at the C retracement because we know there will be a move to the downside. And this is like the generalized theory of what inner structure is, where you will find it, etc. But that doesn't mean we won't see inner structure in the move from A to B and the move C to D. We actually have something that, when we look on the charts, looks more like this. So this is generally what price action looks like. Very messy, very hard to read. And this is what we mean. So we can actually have inner structure within price legs as well. So if we have something like this just tells us that price is moving very nicely, and we can actually follow inner structure more than outer structure, because at some point we're going to get a break of structure, for example at this point here, and what that's going to do is it's going to tell us that we can look for shorts and we could take a short in to this trade around here somewhere. Or, you know, when price breaks this high, let's say this high is like lower around here somewhere, for example here, and let's say this one breaks it, we can look to take buys at this point and ride the way back up in line with the higher time frame structure as well. And so that's basically what inner structure is, and there's not much more to it, and it is a very useful tool in terms of structure to help you identify where short-term trend is going within a higher time frame price leg. So I hope you have found this video very useful. Make sure to subscribe, give this video a like, comment below if you have any questions about this, and I will see you in the next video.